Hi everyone and welcome back to today's morning report with me, Richard Perry, Market Analyst at Handtech Markets for Friday the 6th of June, Non-farm Payrolls Friday, and my final chart that I will be looking at today is gold, and gold has started to rally, and that has come on the back of this ECB announcement that we saw yesterday, and because I think gold tends to perform well in liquidity creation environment, and liquidity is being created by one of the major global central banks, and hence a rally in gold. Now, do we trust this as a rally? Well, you have actually got, technically speaking, a bullish key one-day reversal, which is where you fell below the low of the previous day, and then to close above the high. So that was seen yesterday, and that's a very strong move to the upside. Now, that also took us through the initial resistance at 1250, and that now opens the next resistance at 1260, which is around about where the highs were on the 28th and 29th of May. But overhead, we've got several areas of resistance now in place that we need to be watching out for. The initial one being 1260. I've zoomed all the way back here to include the resistance at 1268.24, which is the key low from late April, and then 1276.60. Yeah, the next key resistance is 1260, and then 1268 after that. Now, there is an upside target, I suppose, you could get from this 1240 to 1250 level, which is 1260. So interesting that that's what the upside target would be. So that could well be where we're coming back to, and it being the next resistance level. In terms of momentum indicators, they are far more improved. This is on the intraday hourly chart. Far better than they have been over the past couple of weeks, 3 weeks. So that suggests an improving chart. But do we trust this as a longer term, a medium term buy signal on gold? I don't think it's going to go all that further. I think on the upside, I think in terms of technically speaking, all the longer term signals are still negative. Big moving averages in decline. Certainly the 144, which currently is at 1277, is overhead, and that would be a major test. I just think that this could just be at the moment a bit of a knee-jerk reaction. But as I said, you've got this bullish key one-day reversal, which is a strong chart signal. You've had an initial move above that 1256.50 high today, although very briefly. I think if you were to close above that 1256.50 level, I think that would sort of affirm the move on the breakout yesterday. But I still think that there are significant barriers to get over for this gold chart. 1260 being the first one, and then 1268 after that, which I think will ultimately prove probably quite significant for this gold chart. But at the moment, it's very nice early signs of a recovery. But I think that certainly you've still got to be treating this as one to sell into strength ultimately. Anyway, I wish you good luck in your trading on gold today. Don't forget non-farm payrolls, which could have a big impact. Strong for anything strong dollar is generally negative for gold, so keep that in mind. Anyway, I wish you good luck, and I'll speak to you on Monday now. Thank you.